Hey, what's going on, guys? Welcome back to another webinar. In this webinar, I am once again going to go over any questions you guys have regarding trading. Once again, we have 2 webinars a week. This is the first webinar, Q&A webinar, and then we have a trader development webinar on Thursday where you guys can ask any psychology questions. So I'm going to go through all the questions posted here, and then if you guys once again have any questions, just go down on the question area and go and post your questions and I will get to it. All right, the first question I have right here, let me just copy and paste it. All right, I've heard Zion Usman saying that they have had trouble getting filled at mid-price with TOS and are looking for a different broker. How does this differ per broker? I'm under the impression that all orders go through the same exchange and they all get piled up and processed according to which order was submitted first. Yes, to an extent, this is true, but also there are some brokers that kind of like TD was never really considered to be one of those brokers that tended to have issues with getting filled, right? They were great at execution. Now, there's some brokers, like if you take Robinhood, for example, let's say we look at Robinhood's that one of those brokers where if you try to get filled, it's not going to give you the best execution price, and it's not going to give you the highest execution rate, right? So there are brokers that, yes, they do the same job, but their execution is kind of terrible, right? And TD, from what I've noticed too in the past 2-3 weeks, is kind of presenting the same issue and the same problem. And I think that's because if you guys have noticed, a lot of brokers are going towards the free route where they're not charging commission, right? And maybe that's the issue. Maybe a lot of people are trading more often, processing more trades. I'm not sure what it is, but I've had the same issue with TD as well, where getting filled at mid price or getting filled at all at a good price kind of changed in the past 2-3 weeks. So even myself, like there's times TD works great, but there's times TD's kind of lagging. And like I said, this is just happening the past 2 weeks. And even if you have a broker and you're facing the same issue, it's probably happening with a lot of different brokers as well. So like once again, I'm looking at other brokers as well. I'm going to give it until end of December. If TD keeps bringing up these issues, I'm probably going to shift over from TD and maybe go to a different broker. I just, as of right now, I haven't made the shift, but if it keeps going on, I'll probably make the shift too. But their execution is all different. Every broker has a different execution process, a different execution rate, depending on how quickly, like when you hit the buy button, the time it takes for the order to go from buy and to hit the exchange and to actually come back filled, every broker has a different process and a different speed behind it, right? And TD's been known to be one of the best, but in the past 3 weeks, they've kind of been sucking at that. All right, next question. What's up, Omar? I have a question about fills. I'm waiting for opportunities to get into trades and I could never get fills. At first, I noticed it was the strike price I would try to get in. There wasn't enough volume. But now I became aware of that mistake and I now try to trade only in the money strike prices and make sure that there's volume. I have been using Active Trader as well. I still have the same issue of not getting fills. It gets to a point where then I'm chasing the trade and my initial entry is completely off. Then it gets to a point where I sit out the trade. Any suggestion about that would be great. All right, so let me just bring some light to this question, right? For people that probably haven't traded, this is kind of going to be hard for you, or people that haven't probably traded options. This applies a lot to trading options, guys. Now, when you guys are trading options, getting fills or getting filled is very, very hard, right? Getting an order to execute, or let's say for an order to go through, the moment you hit buy, for that order to get filled or for it to get executed is very hard when you are trading with real money, which is why I've said a lot of times, paper trading and trading with real money are completely 2 different things, right? So when you trade with real money, getting that fill is hard. Now, when you're trading with options, you have to understand with options, it comes down to something like this, okay? So you trade options. Now, obviously, there's one thing that you have to pick, which is the strike price, right? What strike price are you taking the option trade on? Now, before you even go into the strike price, it also depends on what stock you're trading, right? For example, if I go and I trade Apple, let me show you guys an example. Let's say I go and I trade Apple, right? I want to trade Apple options. So let me go here, let me go to trade, let me go to Apple. So if you guys take a look here, and let's say I trade this week's calls or puts. Let's just say I go to calls. Now, Apple right now is trading at $280. I can go about this two ways. I can say, hey, I want to select a strike price at 235, which obviously doesn't make sense, or I want to select the strike price at 280. Now, obviously, if I go to 235, you guys can see there's like no volume there, meaning trading activity is very, very low. Now, if there's low trading activity, it's going to be very hard for you to get filled. It's going to be very hard for you to buy or sell at a good price. Now, obviously, if you trade the 280 strike price, there's a lot of volume. Higher volume means higher liquidity. Easier for you to get in, easier for you to get out, easier for you to get filled. So obviously, when you're trading options, something where you're not going to see a lot of volume, where you're not going to see a lot of trading activity all the time, this is something where you have to make sure that you're trading something with volume. Now, let's say I go to a random stock, and this is also where a lot of people mess up in options. Let's say I go to Tandem, TNDM, right? Now, if I go to this stock, and let's say I'm trading Apple, I trade 50 to 100 contracts in Apple consistently, I can't just pick up a random stock and say, okay, I'm gonna go trade calls. Okay, I'm gonna go trade puts. Because if you look at the volume on this stock, the option for this, it's dead. You don't even see 100 on anything except one of the contracts, right? So there's very low liquidity here, very low liquidity here. So if this is something I wanted to trade, I would have to know I can't scalp it. Scalping on this is going to be very hard. I can't go in with size because there's not a lot of volume. So my approach with this stock would be a lot different than trading Apple. And that's very, very important to understand. The next thing is when you guys are trading, especially scalping, it's very good to get familiar with that play. It's very good to get familiar with that stock, because now if I'm scalping Apple, I understand that I want to, obviously as a scalper, I want to stay in between a price around here. That's number one. Number two, I want to make sure that there's volume, there's interest there. Because if there's volume, me as a scalper that's entering and exiting very quickly, I know that that move is kind of supported. That move is available for me to get in and get out effectively and immediately. So that's one thing I want to make sure. Now, that's something a lot of people overlook. People don't look into that. They just jump into an option contract and just trade it right off the bat. You can't trade options the same way you trade stocks, right? Stocks, yes, most stocks, there's going to be a lot of liquidity. 500 shares traded, 1 million shares traded, 10 million shares traded. Options, a complete different game. Now, once you've kind of crossed that path, the next question it comes to, I'm never getting filled and I'm always missing the trade. Now, it depends. Right, so let's say we look at an option contract. We have the bid and we have the ask. So I'll show you a real example right here. Okay, let's say I take it's 519. Let's say I put it in number one. Okay, let's say I take this example right here. Where's Apple? Boom. Let's say I look at Apple right here. Okay, I go to Apple and I'm like, you know what? I'm gonna put the 280s. I'm going to send this to red. Now, when I send this to red, I have a bid and I have an ask. Now, if everyone takes a look right here, you guys should be able to see I have a bid and I have an ask. Okay. Now, what's all of this represent? What's all of this mean? Just to kind of break down an option execution trade for you. When you guys are trading options, the bid represents people that want to buy and the ask represents the people that want to sell. Now, right here, we have the spread, which is 17 cents. Now, there's obviously a high spread right now because the market's closed. This is aftermarket. You can't trade options aftermarket. I'm just giving you an example of, let's say this is real. Now, since I'm looking at calls, obviously I anticipate the stock price to go up, okay? So as I look at the calls, and let's say the stock is at 180, and it's about to break that 180 mark. Now, depending on how I'm about to trade this matters a lot. So once again, let me walk you through this. Be patient. I'm gonna get to the end. It's probably going to be confusing in the beginning, but let's understand it. This stock, Apple, is at 180 right now, and it's about to make a move up. The moment it starts making a move up and goes from 180 to 180.10, right, 180.15, where a lot of people get stuck, especially with options, is when they look at the bid and the ask, they immediately, because it's in our nature, they want to pay either the bid price, they either want to pay $2 or they want to pay something in between. No one is willing to pay $217. Now, if you look at this scenario, if you want this stock or if you want this option right now, you have to buy it from someone that's selling it, and the seller is at 217, 39 contracts, 28 contracts. So let's say this stock, Apple, is about to make a move up. I see it's making a move up. Me personally, what I would do is I would just hit the ask, meaning I am buying it for whatever someone is selling it for. I'm not using market. I'm just going and saying 217, give me 10 contracts, my order executes. Now, if this moves up very rapidly, my bid price, and this is something I want you guys to focus on when next time you see option premiums move up or down, I want you to look at the bid price and I want you to see how the bid price fluctuates and makes a move up. At this point, what starts happening is the bid now goes to maybe 215 and the ask maybe goes to 230. You pay 217 and obviously you can try to sell it at midpoint. You have a quick scalp. Now, if you didn't take that trade, what tends to happen is you're so stuck on paying, let's say, a midpoint of 210, this goes to 230, and now you're like, okay, now I'll pay 220. It's not gonna work like that because the prices have fluctuated based off the stock, and the stock is obviously not going to reverse immediately. So if it keeps going up, these points are gonna immediately start moving up, and that's where the chase happens. So next time you're in a trade, especially an option trade, and you see the bid and the ask, and you see that the stock is moving up and you kind of have a good idea that it's probably going to make a new high or continue moving up, I would just hit the ask. The time you want to try to hit the midpoint is if the stock is consolidating. But if the stock is making a massive move up and you think it's going to keep going, I would hit the ask, I would get in, I would scalp and get out, right? So that's why you're probably not getting filled, because every time you try to get filled, you're like, okay, right now, based off this scenario, I want it for 210. When this goes to 230 and this goes to 215, right? What happens is you're like, okay, I'll pay 220. And then when this goes from 230 to, let's say, 250, and this goes from 215 to, let's say, 230, you're like, okay, fine, I'll pay 240. And then when you do this 3-4 times because you're trying to pay a lower price, finally you're like, you know what, fine, screw it, I'll pay 250, I'll pay 260, I'll pay 270, I'll pay 280. And then that's when you start hitting it at the top point and it starts reversing. Also, one more thing with options, just to kind of, you know, express to everyone on option premiums and how they move. When a stock makes a strong move up, you have to understand your option premiums are going to jump rapidly. If you didn't get in around this point, be very, very skeptical on chasing, because if you chase and you get in around here, the moment the stock pulls back or sells off or whatever happens, the premiums are going to take a massive hit. So be very, very careful on chasing when a stock made a big move up or a big move down. If you can get in on the initial play, cool, your premiums are gonna rise, they're gonna increase rapidly. But if you try to capture this play when it's moving consistently at a higher level, you'll notice you end up paying a lot more. So it's just not worth it at that point. All right, next question. Could you share the relative volume formula for TOS with us? I don't have it with me. I think Z or Usman has it. Let me just write that down so I can post it. 1 second, relative volume formula. All right, I'll post this. I'll post this in the Discord right after the chat. I'll ask Z or Usman to post theirs. I think they have it. I don't use it, but I'll get it from them. Do I still have it up on mine? Relative volume? No, I took it off. Yeah, I'll get that posted right after. All right. Next, I see that you usually trade high probability plays about 1 to 3 times a day. Why don't you trade more often? At your level, you can also easily determine plays with only a 70% probability rate. For example, instead just focusing on the 90% probability plays or So in this way, make more money, right? Yes and no, right? So a few things like with me personally, right? With me personally, I can't be in more than two positions at one time. Like even if I'm in two positions, for me, that's a lot. Like that's something maybe I have to work on, maybe I have to get better at, right? So even like you'll notice like when I post mentions and exits with a lot of trades, they're usually at different time frames, right? Meaning one trade might be from 9:50 to like 10 a.m. Another trade might be from 10:11 to like 10:20 a.m., right? So one thing with me is I'm unable to be in multiple positions at once, and I know if I can kind of build on that and allow myself to be in like 3 positions at once, 4 positions at once, and manage them, I'll be able to obviously make a lot more money. And that's a struggle I have. My thing is the moment I get in 2 or more trades at once, I start messing up. Like some people are great at that. Some people are able to be in 3 positions, manage it. I can't. Like right at this point, I have a hard time. So that's number one with me personally. Second, it just with size, especially with options, it's just I feel a lot more comfortable, and this is something obviously you as a trader have to build on. I just feel a lot more comfortable on getting into plays, especially for options that just seem extremely well, opposed to just getting in, getting out, getting in, getting out. Because I've started consistently trading options. I'd say from like May, right? May, April. That's when I went to options and started consistently trading them. I've traded them back in the days here and there, but never really on a consistent basis, right? So when I started trading it on a consistent basis, obviously shifting from stocks and then shifting to options with the option fills, with it being hard to get filled with the instant premium increases or decreases, is kind of in a way a new way of trading, right? Then obviously size too, right? Like I can go into a stock and I can go in 250 grand in a minute or two, and that's not a lot of size in me buying Apple stock. But now me putting 250 grand in, let's say, options, or even buying 200 contracts is a pretty big deal. So the size aspect also makes a huge thing. So I think with me, it's just building that comfortability where I'm able to replicate what I was doing with trading stocks into options. And like I said, I started in like May, fully doing it. And obviously along the ways, there was a lot of ups and downs and so on with, just changing your mindset, changing the way you trade, your approach. And even when I was trading like stocks and stocks only, there were times I could be in 2 or 3 positions at once, because for stocks, when a stock makes a move up or down at a certain level, you kind of have a fixed loss. With options, depending on how quickly the option fluctuates, your loss isn't really fixed. It's kind of in between a range. And I think, like I said, that's something that I need to personally myself need to get better at for me to go to a higher level in trading, right? So that's the reason I'm not like, even the trades you see at times, it'll be like 1 stock or 2 stocks or 4 trades in 1 stock, and that's it, because I'm just incapable of trading more than that. And at the same time, it's also kind of where I have a cutoff for me, where it's like if I'm done by 10, 11 a.m., I don't really try to milk it all the way. I don't want to sit in front of my computer all day either, to be honest with you. So that's the second concept where I'm like, all right, I'm kind of done. All right, next question. All right. I am focusing on penny stocks between $4 to $14, but if I'm having a hard time finding the right stock, even if I find the stocks that are on my criteria, that stock has already ran massively and I am left behind. Then I am scared to trade. So my question is how to catch a stock that's about to go up. Do I use a paid screener or a custom screener? Thank you so much. So it depends on how you're looking to trade, right? Are you looking to trade stocks that already have momentum, right? Like, do they already have a big move behind it, or do you want to catch stocks that just came out with fresh news and it looks like it's about to move, right? So it kind of depends on what you're looking to trade. So basically, one way to go about those type of stocks would be for you to aim on the pre-market movers, right? Every morning in the pre-market, there's certain stocks that are moving up, there's certain stocks that are moving down, and obviously the stocks that are moving up or down, like I'll show you an example. Look something like, let's say like this, right? Pre-market scanner, you can see all the stocks that are making a move up or down. So obviously when you see this, you're not just gonna open it up and start trading them. you're obviously going to look at the stock. Let's say ACHV moved up 69% around 8:56 a.m., 1.2 million shares traded, pretty strong, right? So I always care about how much the stock moved up and if there's volume. Now, if a stock moved up 14% on 6,000 shares, I don't care about that. But now let's say we look at ACHV. Let's put that in, ACHV. Right now, when we obviously look at the stock, we can see what happened. Wow, huge sell-off. What was that? Okay, they did an offering, they raised money, that's why it sold off. But that's why you have to be careful with these type of stocks too. But the whole idea is to look at them pre-market, look what happened to the stock. Obviously, just looking at this pre-market, I think wouldn't be a good stock to trade. Just to kind of break this down real quick, you can see pre-market stock goes from about 80 cents all the way to 178, right? Makes 100% plus jump, phenomenal. But then it also went from 178 back to 90 cents. That already is kind of like, hey, red flag, don't touch this. Because if a stock can fall, 50% in the pre-market, that's already bad. And then obviously, depending on what it did pre-market, let me get another example. You can trade from there. But looking at this stock, if I see a stock is down 50% pre-market, even though it still looks like it's up, that's already a red flag. And then you can see in the open, you can look to trade it. Obviously, this stock didn't do much, but let's go to another one. This stock, if you guys look at the pre-market story, the pre-market story is already kind of bad. All right, let's say we look at TGE. All right, TGE. Did they get a buyout offer? Probably got a buyout offer. Yeah, buyout offer. Usually when you guys see a stock gap up and it stays flat, they probably got bought out. Let's check another stock, IMGN. IMGN, same thing here. If you look at IMGN, very same thing. I'm just showing you guys examples of stocks that make moves up or down in pre-market and how to determine stocks that are actually going to move. Look at this stock, right? It goes from 420 to 580, dumps from 580 all the way to 460. That already is a red flag. I wouldn't look at that. Right, let me find like something that actually made a move and ran. Box, no. JBL, maybe. Let's see JBL. JBL, same thing. JBL dumped. Let me see, maybe yesterday. CEI, nothing is moving. I think the mid cap area is kind of dead. CEI, same thing. Nothing really moved. 667, FinV. Yeah, nothing's really moving. That's crazy. Let's look at movers on the downside. PTI. The whole game with playing these type of stocks. Okay, PTI is one that kind of moved. Okay, let's look at PTI on the other side. So you can see PTI stock moved down from 526 all the way down to 220. 50-60%, huge move down. Pre-market low, look on the open, it holds flat right there on the open. Right when that open broke, you kind of have like a 25% move down, right? So the whole idea of having these pre-market plays is obviously you want to look at pre-market first. You want to look at all the stocks that made a move up or down pre-market. You can see this stock obviously sell off, whatever reason it sold off, held this 240, 220 area on the open. You can see a lot of hold around twos. Right when that 2 broke, went from 2 to 150, 160, made about a 20-25% move down. And you as a trader, you're just kind of using this information, right? Obviously, you're not going to get in right there and get out right there. Your whole idea is to use this information to try to capture a 20-25% move, which is obviously a lot, especially in this short time period. So that's what and how you're using or finding these set of stocks that are making moves up or down. But you can't look at this stock and say something like, oh, I wish I got in here and I got out there on the short side. Not really possible. This move went down because of news, right? It held. Now after the news came out, that's where your eyeballs are going and you're like, okay, now I can watch this stock. When you watch it, you establish your levels. Once your levels are established, you can now go and you can kind of create a good, solid, high probability setup at that point. So that's the whole ideology of creating those setups. All right, next question. Oh, and do I use a page screen or a custom screener? I mean, you can use the one that's posted in Discord, which I just showed right here. Or if you want to get this on your own, you can get it on your own. It's called Trade Ideas. But I think this right now is more than enough. You don't really need to go in and look for anything else, to be honest. All right, next question. Copy. When looking at level 2 for an option contract, does the number displayed have a multiplier of 100 like with stocks, or doesn't it? Thank you. You mean, where is it? Let me just get the same thing. Let me just show you an example. If you're talking about this, let's just say we get a contract in, send to 1. If you're talking about this right here, yes, it does have, this right here represents a contract, and then obviously you can multiply that by 10. So, okay, I see what you're saying. This right here, if it's 10, that's 10 contracts. Obviously, if you have 10 contracts, it's not gonna multiply this by 100 and make it 10,000 contracts, but it is gonna make it 10,000 shares. Because obviously, if you have 10 contracts multiplied by 100, it equals 10,000 or 1,000, whatever it is. 1,000, I'm an idiot. Yeah, 1,000, not 10,000. Yeah, so that's just for each contract. Okay. All right, next question. All right, so I have 11,000 in my account. How many contracts should I be buying when I scalp? And how fast should I exit my positions when it pulls back or consolidates? Because that will hurt the premium, right? Okay. First and foremost, just because you have 11,000, I would not recommend you go and trade with that, right? Because there's some questions that need to be answered. How good are you with execution, right? Can you execute? Like, can you execute, get in and get out very quickly? If the answer is no, you shouldn't use 11,000. I'm sorry, not something you should do. You should size down and start with much less, because if you go in with 11 grand and you're like, I have 11 grand, so since I have 11 grand, I should go in with 11 grand. That's a huge way of kind of destructing and destroying a trading account. The next is, as I mentioned, execution. Can you execute? Yes or no? Very honestly, like, can you do this? Can you execute at a high level? Yes or no? If the answer is no, which is okay, you work on that. Second is, comes down to risk management. Now, if you took on a trade right now, and this is a question everyone needs to ask themselves, right? If you take on a trade right now, okay, how much red would you have to see for you to panic? Like, what is a fair number? Like, if you saw you're down $100, would you react? Some people might say yes, some people might say no, right? Some people might say no. Now, what about if you said no, what about 1,000, right? So you want to figure that out on your own. Just because you have 11,000, and this could be anyone else. Some people might say, oh, I have 15,000 based on how much I have. How much should I trade? Oh, I have 11,000 based on this. How much should I trade? No, it comes down to, number one, you need to identify yourself, right? How much are you comfortable in losing? Now, if you have 11,000 and let's say you go by the 2% rule, where the most you should lose on a trade is 2% of your total account size, that might not apply to some people. So if you take 11,000 and you apply the 2% rule, that equates to $220. So based on the 2% rule, the most you should lose on a trade is $220. So if you take on a trade right now, tomorrow, whenever, you shouldn't lose more than $220. But now you might say, whoa, $220 down on one trade? Holy shit, that's too much for me. Like, if I see I'm down $220, I'm gonna panic. Cool, thank you for being honest. But what's that number? I think 100 is fair. I think if I see 100, right, I'll be okay. Like, obviously it's not the end of the world. I'm okay. Cool. Size down to 1%. That's it. Simple, right? Don't go in and go based off your account size. You need to go based off how much you're comfortable in losing, because you are going to lose. And then obviously your account size has to play a role. Now, obviously you can't go here and say, I have 11,000. I'm comfortable in losing 3,000 a trade. Well, I'm comfortable in losing that, so I should be able to lose that or take the trade from there. No. Now your risk management is completely off, because all it's going to take you is about 3 to 4 bad trades for your trading account to go to zero. You want to put yourself in a situation where if you have multiple bad trades, right? Let's say this is your bad trade chart, right? If you have multiple bad trades, your account slowly bleeds out. Most people have 2 3 bad trades and the account gets destroyed. So you also want to make sure of that, especially when you're first starting out, because when you're first starting out, guys, it's not easy. It's very hard. There's a lot of roadblocks you're going to go through. There's a lot of issues you're going to come across, and the issues are not trading related 100%. There are going to be some things that confuse you in trading, and obviously it's a continuous learning trading journey. But also there's going to be road bumps where you have personal issues that get carried over to trading, and you start seeing it maybe not the first month, maybe the second month, maybe the third month, and when you see it, the whole goal is to kind of fix it and build on it. All right, next question. Hey Umar, I will be starting with a very small account, 5K-ish. I've been paper trading as if I have 5K, and I've been doing okay scalping stocks, $50 to $100 a day, and on the days I have losses, they are small. I took your in-person option class and I've tried trading options, as I know this will be better for a small account, but I'm struggling with the fills and not as fast execution. Should I keep staying the course with options due to my small account or go back to stocks? Okay. Now, a few things, okay? All right. Now, when you're obviously paper trading, once again, guys, and this is very important for everyone to understand, when you paper trade, everyone kind of makes money because obviously there's no emotions, right? You get filled very easily. There's no market makers. Like there's no real issues. But when you go over to real trading, your emotions kick in, right? It's harder to get fills. It's harder to get out, get in. So all these things wrap in, so it becomes harder to trade. So if you've done great at paper trading, great, phenomenal. But please don't carry that sort of success that you had on paper trading over to real money. Like don't say, oh, I was making $100, $200 a day. As soon as I go over to real trading, I'll be able to do the same. No, like it doesn't work out like that. Okay, that's number one. Number two, it depends on how you want to go about it. Some people would rather trade stocks. Some people would rather trade options, but you just have to understand what you're good at, what you want to do. Obviously, if you're trading options, depending on how you're trading them, are you day trading them or are you scalping them? If you're scalping them, you building yourself to a level to execute at a very high performance rate isn't going to happen overnight. That's something that's going to take time, something you're going to have to be very patient with, something you're going to have to build, right? You're not going to jump into options or any sort of trading and be able to execute immediately at a very high pace. This takes a lot of time. Now, if you're coming in and you're day trading, very similar thing. Now with options, obviously there's a lot more risk. The risk with options is a lot more, but the profit is a lot more too, right? Compared to stocks. Now that doesn't mean stocks are bad. That doesn't mean options are good or options are bad, stocks are bad, whatever. It just means that you have to understand with stocks, there's less risk and less profit potential compared to options. So it depends on what you're looking for, what you want hand in hand. With options, your execution has to be a lot better, right? Especially if you're flipping premiums, you have to be able to get in, get out. You have to be able to hit the bid, hit the ask, know how to work around that. And it does require a lot of practice because it's very high, fast paced, and you have to make sure you're allowing yourself or putting yourself in a position to get great and high quality fills. Okay, so that's the first thing that I think you should kind of ask yourself before moving forward or thinking about anything that you want to add, take out, or whatever the case is, right? Now, the next thing that you as a trader want to understand is, a lot of people kind of gravitate towards this is I want to grow my account the fastest, and I'll say it a million times. Cool, you're starting with 5 grand, and you can't start with 5 grand and think you're gonna make $1 million in a year, 2 years, a month, 2 months. It's just, I don't want to say it's impossible. It's definitely doable, but you don't want to set those expectations. The only expectations you should set for yourself, and this is for everybody trading, is just to, at the end of the day, become a better trader and identify your strengths and identify your weaknesses and build on that. If you're able to identify your strengths and identify your weaknesses and legitimately build on that, you as a trader are going to do very, very well. But if you can't identify your strengths, if you can't identify your weaknesses, you're not going to allow yourself to, get to a higher level. And I mentioned this before too. I don't know when I'm gonna do it. Maybe start of January. This is something I'm gonna start myself. I'm gonna start a $10,000 account. post my entries, post my exits in the group chat consistently, and just show it, because I do know when you trade with less than 25,000, it's a complete different approach. And like I mentioned in like one of the previous webinars, like I want to start it. It's just a matter of when, and I kind of want to start it just to kind of make it a little bit more relatable to people that, you know, are trading with less than 25,000, how they can go about it. Because obviously if you're trading with 5 grand, you can't really scalp, because when I'm trading with, you know, my account size, which is above 25 grand, I can get in and out 1,000,010 times and I'm okay. But if you're trading with 5 grand, you won't be able to do that, right? So I am gonna maybe start that hopefully in January, worst case worst, latest February. One of those times I'm gonna do it for like 30, 60 days and just kind of document that journey, just to kind of show people like, hey, if you do start with a less amount, this is the approach. Because obviously the way I'm trading right now, that same approach is probably not gonna work. Next question. So pretty much right before a breakout by the ask. Yeah, so if you guys are trading options, if you think a stock is gonna break out and it's like gonna break out in the next 10, 15 seconds or quick, just hit the ask and get in. Like that's what I do. I just hit the ask and I get in. All right. What do you think of BA for tomorrow? Breakdown of the trade, please. Thank you in advance. Sure, I'll look at BA. So BA obviously announced negative news. They're grounding their planes, not producing them anymore. That's like the last news I saw with them, didn't follow with them after. Now, obviously, when you guys, I'll just give you like a full trade breakdown. Whenever you guys do a trade breakdown, obviously it depends on how you're trading, right? And I'm not going to do a lot of trade breakdowns, only what I'm going to do. A few things you guys want to understand is you always want to start from a large time frame, right? The idea of starting from a large time frame is understanding the overall play, right? When I start from a large time frame, I like to establish certain levels, like key points that are immediately seen, that I can see right away. And obviously when you do it the first time, they're not perfect. So if I start applying my levels the first time, it's not going to be perfect. So 320, 321.29, whatever, I have a level here. That's one level I really, really care about. Now, why do I care about this level a lot? Because if you guys look in the history of this one stock, BA, you can see that around here, there's been a lot of action, right? So that's one thing. So me looking at this, what do I see? What do I see happening? I obviously see BA gap down from 340 all the way to about 336, fell to 327 yesterday. My first question on any stock, whenever I'm looking to trade it, is obviously why. Now, if you're playing this on the longer perspective, it's a little bit different, but if you're day trading, scalping, it's also a different approach, but the idea is the same thing. Right now, looking at the chart right now, I know BA is at a very, very comfortable level, right? It's at a comfortable zone. How do I know it's a comfortable zone? I go back in history, simple stuff, right? Makes a move up, has a hard time, breaks out, springs into here, springs into here, springs into here multiple times. Now, some people might say, wow, but it went right through that 2 times. Yes, it went right through that, but you also have to remember at this time, there was a huge market sell-off, right? At this time, market was legitimately selling off like no tomorrow. A lot of stuff was going on. This was last year, November, December, and obviously market rallied. But there was a lot of noise here. Moving forward, same thing here, buying pressure, and now it's in the same zone. So a few ways to go about this is, let's just say I'm looking at this. Number one, I'd want to understand the news, right? What's the news with the overall company? Why is the company going up? Why is the stock going up? Why is the stock going down, right? So when I see that, I want to understand like, hey, it went down because they announced that one of their planes, they're going to stop making it, whatever the case is. Obviously tomorrow, I don't know what's going to happen, right? Tomorrow, they can come out with good news, they can come out with bad news. That's a given, right? But beyond them coming out with good news and bad news, when I look at the basic price structure, what I see is I see a huge move down. I see it at a critical level. Now, if the sentiment stays negative and it can maybe break the 320-ish area, I know there's maybe a continuation with BA. Now, when I look at a larger time frame, the whole idea is to break it down into a smaller time frame. Now, when I go to a 20-minute time frame, everyone should be able to see, look what happens in this zone. in this zone, when the stock gets around the 320 area, you can see it tends to hold. Now, looking at it from on a smaller perspective, the next thing is, okay, let's establish levels. Obviously, I care about this level, right? This is where the stock gapped from, but opened at a high of 335, got rejected. 330 is another level, right? Now, when I do that, obviously I'm looking at the most recent price action. The second thing I like to do is I like to go to a smaller time frame and say, you know what? Okay, I have the 30-minute, but let's look at a 5-minute. Let's actually look into this price action concept a little bit more. Now, when I look at that, I can see yesterday 335, nice rejection. Look where it bounced off, 330. Held 330 pretty nice, sold off, tried 330s again, got rejected, tried 330s again, got rejected. Moving forward today, strong rally around 10 a.m. There was pretty healthy volume, made a strong move right into 330. Now the levels I have, these levels start becoming intraday levels. Now, obviously, when you guys have intraday levels, you can change the colors of these levels to whatever color you want. So let's say I change the color of this to orange. Now, if I want to go to even microscope levels, right? Like I want to go to even smaller levels. I'll say, you know what? I'll go to a smaller level and I'll identify what's happening. So when I go to a smaller level, I can say, you know what? This area, maybe let's say we go around pre-market high 325. I have something around 325. 325 was yesterday's after hour high, today's pre-market kind of high, almost the opening high, right? And then I can go and get smaller levels, smaller zones. Now, when you guys look at all these smaller levels and zones, that's where it looks like there's a lot of lines, but you have to understand the meaning of each line. So when I look at this, I understand that there's one play in here, a big play. I also understand there's a big play from 320 to 330, right? There's a nice big play in here, but also in between these plays, there's going to be smaller term moves, smaller term levels. Now, if you're an options trader, right, seeing a stock like BA, if you can get in at 322, if you get in a call at 322 and get out at 324, a 2-point move, that is more than enough. Like that itself is phenomenal. Now, if you get in at, let's say, I don't know, 325 and you get out at 327, that itself is still a good move. And I'll show you an example, right? So let's say we look at BA. Like, let me show you guys an example. If you were to, like, you know, because the whole thing that I see a lot of people trying to do, and I think that's why they're not consistent. Let's say 325. I'll look at 325, right? Let's go to BA. And I think this is what throws a lot of people off, because a lot of people are trying to make a crazy amount of money in a short period of time. And I tell everyone, like, hey, stop trying to do that. So let's say we look at today at 1040, right? Go to 1040 for a second. Look at 1040. So at 1040, just to give you guys a little perspective, let's just say you get in somewhere at 1040, right? Let's say you get in somewhere here, and let's say you get out somewhere there, okay? From this point to that point, if you just look at the option contract, right? You're buying, depending on where you're buying, anywhere, right? From about 370 to about 493. So let's say 470, or let's make it average 440. You buy it around 440 and you're selling somewhere high of 660, high of 680. There, it even goes to 7, but let's say we look at the chart and we see it's consolidating 1050. If you look at 1050, 1050 is trading around 589 to 680. So let's make it $6. So you buy something around 440, you're selling close to 6, right? You do the math on that, you're making $1.60 per contract. Each contract you're making $160, right? And each contract is costing about $440. So you're putting in $440 and you're getting $160 back on average on this trade. Now, when you scale this, and let's say you buy 10 contracts, 4,400 back 1,600. And yeah, I don't want to go back and say you could have done X, Y, and Z, but I'm just showing you perspective. And the reason I'm showing you this perspective is because as a trader, you need to understand, depending on how you're trading, you don't need to get in here and get out there. Yes, guys, if you got in at the low at 250 and sold at 8, you would have made a lot of money, but how realistic is that? It's not realistic. No one's really buying here. And even if you buy here as a smart trader, if you're up 100%, 200%, you're taking it off the table. You're not keeping it. Like, I'm sorry, no one is consistently buying at the bottom and selling at the top. That's not happening. That's not a realistic thing. A realistic thing is buying at 440, getting out at 6, making a solid percentage on the trade, in and out. And that's where the levels kick in, because once you start mastering these levels for certain stocks and you start understanding like where these levels exist, what the key points are, what's happening with the stock, okay, it's reversing. And now even if you look at the reversal, which I mentioned on last week's webinar, 10 a.m., look what happened. Strong open the first 5 minutes and then sell off till 10 a.m. and look at that reversal, which is why I say at 10 a.m., like, be careful with a lot of stocks because those reversals really kick in. But now if you look at the overall play, once again, you'll see the whole idea is not to capture this big move. Phenomenal if you got in. Idea is to like read this level, read that level, capture this move. That's it. Not even get in here and get out there. Right? It's legitimately just to try to capture a quick move up, quick move down. Right? Even looking at BA from yesterday, see this level it's holding? Just capturing this move till the low of the day. Right? Even this move right here would have made you 20, maybe 30%. And that's the whole idea. Like, the idea is not to capture big plays. And think about it, if you capture this consistently, right, over and over and over again, right, you put in 440 or 4,400 and you make about, let's say, 1,100. You do that 2 times a week, not even every day, that's $2,200 a week. And I'm not trying to, give you guys like, oh my God, look, you can make $2,200, flip, blah, blah. No, I'm not selling that bullshit, but I'm just giving you an idea so you can kind of measure this from a proper perspective. You don't have to trade every day. And besides trading every day, you just have to capture small moves. And if you're doing that, you'll be able to consistently make money. All right, next question. All right, next question. For options contract, should my stop loss be 50 cents or $1? I mean, your stop loss should be based off the stock, not the option contract. Your stop loss should never be based off the option contract, right? So if let's say I'm trading BA and BA is at 370, right? And I buy a call once again is me anticipating the price is going to go up, and the stock breaks 370, my stop should not be where the call contract is. It should be based on the stock's price, because the call contract or the put contract or any contract on options is going to follow the stock price. All right, next question. Do you recommend getting intraday news alerts for all stocks you're focusing on that day, or would you rather watch a move happen then confirm if there's a catalyst? I'm namely getting about 100 alerts for 15 stocks I follow, and it's a bit overwhelming. You're getting 100 alerts for news? I mean, what are you using for news? That's a lot of alerts. 100 alerts, I think that's way too much, especially for 15 stocks. That's way too many alerts. I mean, getting 100 alerts a day is legitimately going to drive you crazy. I think you have to look into the news and TOS news alerts. Yeah, turn the TOS news alerts off, because TOS news alerts, guys, if you have the TOS news alerts on, they're going to alert you every little thing about that stock, even if there's an article coming out, right? You don't want to have that. You want to have market moving events. Not a lot of news comes out that's really going to move a stock. Like, for example, Disney, right? Disney had news with the 10 million subscribers. That was probably the only midday news Disney had for probably months, right? Apple doesn't have midday news events. Apple's event or news comes down to like Trump, China deal, right? And that itself, you can just see the overall market, because even when the news does come out, the market makes a quick move, consolidates, reverses, and then continues, or maybe reverses. So what I like to do is, if I see a sharp move and there's an alert like, oh, Apple just moved up or moved down, let's say moved down 5%. I'm like, whoa, Apple moved down 5%. Wow, that was a strong move. What happened? I look at it, I watch price action. If it's a strong move down, I wait for a consolidation, continuation, then I take the trade. But if it's a sharp move down, I'm not getting in until I see the stock take a break. And just having that many alerts, getting 100 alerts a day, it's just gonna keep your head everywhere. Like, you're gonna be on a swivel. What's this? What's that? Instead of you being locked in and focused on what's actually going on. Should I be buying the same amount of contracts for large caps like Facebook, Apple, Netflix? No, I mean, they're all going to be priced at a different amount. That's position sizing. That's all position sizing, right? So Facebook's contract that you're buying is $2, right? And Tesla's contract you're buying is, let's just say, I don't know, $20. You can't go to both of them and buy 10 contracts, right? 10 contracts here, right, is going to be a lot different than maybe 10 contracts here, right? So that's a complete different thing. I don't even know if that's the right number. Two, I don't know. But it's going to be a complete two different thing, because the whole idea is you want to go by position sizing, right? And a $2 contract and a $20 contract, the contract number might be the same, but the value is different. So you want to go based on the value, the cash value, not the actual contract amount, right? You might buy, once again, you might buy 10 here, but you might only buy one here. Two different concepts. And it should be based on your account size and the risk tolerance you're looking to pull out. What stock do you recommend for a small and large account? I find it challenging to build a watch list for each. For example, I learned that with the small account, one could not trade Amazon or Tesla. I mean, if you're looking to trade Amazon or Tesla with the small account, I'd recommend go with options, scalp options. But if you're like, hey, I don't want to scalp options, I want to trade stocks, then scalping these with a small account is going to be hard. That's where, it would be cool to go to a small cap or a mid cap company that has a catalyst behind it, right? That has some sort of news that's pushing it up or pushing it down, and you kind of take the trade from that perspective, right? And that's where the whole scanners kick in, where you scan for those names that made it move up, made it move down. Or you can even go to a website called Finviz, right? Let's say finviz.com. You can even go to this website, and if you go to finviz.com, you'll see like a lot of different let's see, stocks here. Like if you go to Finviz, you can see all the stocks that made moves up today, stocks that made moves down, and you can obviously go through them and kind of see, ONCY made a move up. Does it continue tomorrow? Like, see, even if you go to ONCY's chart, you can see strong move up from 40 cents, pulls back to 80 cents, goes back up to 140, pulls back, strong breakout today. Now, if it breaks two, just looking at this chart, might see a continuation play. Cool, phenomenal. Gonna add this to my watch list and watch it tomorrow. If it breaks two, I'll trade it. If not, I won't trade it. So that's the whole idea of looking for these type of stocks. Do you always set your levels from daily, 30 and 5? No, it depends. Usually I like to start from daily, and depending on that stock afterwards, I like to go to intraday. Sometimes, let's say the 1 hour, and then maybe go into the 15-minute, but it all depends on the stock and how much activity there is, right? With BA, the most recent week, there hasn't been that much activity, right? So even if I go to 3 month, 1 day, right? Or let's say 3 year, 1 day, for these past few days, there hasn't been a lot of activity. So what I'll do is I'll go to like a 1 hour, just confirm these levels, right? Just confirm all these levels. And once that's done, I want to just focus on the past 2-3 days. And, a 5-minute would help me on that because it's such a small time frame where a 5-minute will show me a lot of activity. If not the 5, maybe 15. And just to confirm these levels, just to confirm what's happening, where's the move going, and kind of construct the trade from there. What news source do you use for relevant market moving news? I have Benzinga Pro, P Pro. That's what I use. I'll show you guys the platform too. Where's the website? What's that? I'll show you guys the website too real quick. This is what I have. Do I have it logged in here? Let me see. Just a second. So I use Benzinga Pro, which I don't really recommend anyone to kind of start out getting, just because it's, I think, $1,500 a year, $2,000 a year, and I think as someone starting out, I don't really think it's a program that's really required until you get to like a very comfortable trading level, right? So let me show you Benzinga Pro. I don't even know if I have the settings in here. So it looks something like this, right? So, you know, you could set this up however you want. I don't have it set up on this computer, but you can have workspaces for, you know, a news feed, right? All the stocks that have news, you can make it based off a watch list. You can say, hey, I want it based off this watch list only. Done. Now, only off that watch list, you'll get all the news, right? So you can have like a news feed. You can change the name. Let's say news feed, right? You can have one where you can look for stocks that are breakout, spiking up, spiking down, PCG spiking up 3%, MU spiking up 1.55%, right? So it'll show you breakouts, it'll show you option alerts, it'll show you sectors, it'll show you stocks that are moving up or down, economic events, calendar events, what companies have earnings. So it shows you a good amount. But like I said, I don't think this is something that you should really get until, you know, you as a trader kind of realize or start seeing consistency with some set of stocks. And I think that's when you can maybe implement this if you want down the line. But starting out, I don't really think it's really needed at all. What stock would you recommend who has $5,000 in the account for options trading? I mean, the big names, there's no particular stock. Like I can say, hey, I recommend Apple, okay? But now tomorrow Apple may not have a move, and now if I say I recommend Apple, you're too forced to trade Apple because quote unquote I recommended it. No, like build a list of, let's say, big names: Tesla, Apple, Microsoft, MU, Amazon, Netflix, Facebook, you know, all the big names. And then, you know, whenever one of them presents news or a catalyst, go and trade it. Simple as that, right? But there's no such thing as selecting a great stock. Great stocks don't exist. It's just how you manage your position and how you trade, right? So you don't need to go over the idea of oh, I need a great stock or I need a great trade or anything like that. All right, that's it. All right, guys, so that's it for the webinar. The people for the online training, you guys got an email from someone following up. If you guys are having any problems or issues, you guys can contact him through the email and speak to him. Or if anyone's still having any issues, just ping me on Discord. I'm on Discord right now. So just message me on Discord right now. I'm going to be on it for like the next hour. If you're having any issues or have any other questions, hit me up. I'm going to be checking my Discord, and I will see you guys on the webinar on Thursday. So have a good night, everyone. And yeah, this is going to be uploaded in about, I'd say, an hour max. All right, guys, have a good night and good luck trading tomorrow.